Welcome to this installment of Clarifying Tax Situations with attorney and CPA David W. Crossing.
Is it possible to do a 1031 where cryptocurrency is concerned? What I've seen time and time again is that individuals who are quick to recognize the opportunity presented by cryptocurrencies like Bitcoin, Dogecoin, and Ethereum have likely rode the market to significant gains. Okay? They've done that by when this currency is going up, they jump to that one, and when this currency is going up, they jump to that one, and when this one's falling, they jump to that one, and they basically day trade the heck out of this stuff. And most investors haven't realized that each one of those transactions was taxable in the year that it occurred. A lot of experts believe the rise in the markets was caused by capital in massive quantities being invested in cryptocurrency from China and other developing nations and flooding the market. Also, people who bought, sold, or mined Bitcoin or had an interest in the underlying technology, or just because they saw an investment opportunity, were looking to diversify their cryptocurrency holdings. So there's been a lot of these exchanges going on. In any case, a lot of people out there are considering changing the overall balance of their digital currencies held to increase the likelihood of investment gains or to hedge against potential volatility. In the only guidance to date put out by the IRS, the government called cryptocurrency in general property. They're saying it's not going to be treated as currency for tax purposes. Rather, Bitcoin and similar cryptocurrencies again should be considered property for tax purposes. Well, this raises the specter of, can Section 1031 be used when you change from one property to another? Well, let me make this clear. Starting in 2018, the government has limited the use of Code Section 1031 solely to real estate. So there's no question for the 2018 tax year and beyond, you can't use 1031 for this purpose. There's still an open question, could you use it to fix your prior non-compliance? I'm here to tell you in my professional opinion, no. Okay? I wrote a blog and I asked the entire planet of tax professionals out there whether they thought 1031 could apply. And what I basically boiled my decision down to, and frankly, there's two schools of thought on there. I know there's other attorneys out there that are using the benefits of 1031. I think that's potentially asking to be hit with income tax evasion, because to me the law is pretty clear. In order to use the benefit of 1031, two types of property have to be like-kind with each other. And the only party that could supply a definition of what like-kind is the IRS. Okay, they would have to put that into the Internal Revenue Code somewhere or the Treasury regulations. And that hasn't been done. There's no regulation out there that says every type of cryptocurrency out there is like-kind with every other type of cryptocurrency. There's no law that says that. So unless two properties are like-kind, you can't use 1031 to exchange between the two of them. The analogy that a lot of tax professionals came back to me when we were analyzing this issue is they said, look at foreign currency. If you were going from British pounds to US dollars, that's a taxable event, and you couldn't use 1031 because pounds and dollars are not like-kind. Another analogy is to look at stock. If you sell Boeing stock or you exchange Boeing stock without any cash changing hands for Coca-Cola stock, they're not like-kind with each other, and that's a taxable transaction even though no cash hit your hand. Like I said earlier, in practice, the government is a true arbiter of what assets are like-kind and what assets aren't. In a recent letter to the IRS that came out right after the 2014 guidance, the AICPA asked the service to provide guidance on whether varying types of cryptocurrency were like-kind for Section 1031 purposes. All we got back was crickets. The government never provided that information. And to be honest with you, the government allows 1031 when they're trying to encourage an activity. What they'd be saying to the world is, we want to encourage you to invest in cryptocurrency if they allowed 1031. There's lots of evidence out there that makes it appear the government is hostile towards cryptocurrency in general. So it's not likely that they will ever allow 1031 to be used. As an example of this hostility, recently the Treasury Department's Financial Crimes Enforcement Network, FinCEN, has cracked down on virtual currency exchanges that have not registered with the federal government as a money service business. This shows their hostility. People have been going to jail for this. Of the attorneys that say 1031 can be used, what you would have to do is you'd have to show each 1031 transaction on a return, and then you'd have to disclose that the use of 1031 was an uncertain tax position and draw the government's opinion to it. I think that's a patently bad idea. It could be that 3 years from now you get audited over that issue and they come looking for tax penalties and interest that have gone through the roof. Okay? Potentially, they could say you were just trying to squeeze that past their detection abilities and trying to commit income tax evasion, even though you fully disclosed it. There's a risk, maybe small, but there's still a risk. And really, depending upon the size of the numbers involved, determines how much risk there is. You need to understand that income tax evasion over $1 is the same crime as income tax evasion over $1 million. The only difference is the sentencing guidelines look to the amount of tax loss to the government in determining how much jail time will be served. With the uncertainty surrounding 1031, my position for our firm is that we're not going to utilize it. And because we're worried the government might clarify at some point in the future this issue, we're going to make protective refund claims over the returns that we pay tax where 1031 could have applied before the refund statute expires.